Before we start this week's podcast, I'd like to say a quick thank you to our podcast sponsor, PensionBee. Now, PensionBee is one of the UK's leading online pension providers that helps consumers combine, contribute and withdraw from their pensions, all through the PensionBee web and mobile app. Now, you can sign up with the names of your old employers or providers in just 5 minutes, and PensionBee will help you find, transfer and combine your old forgotten about pension pots into a low-cost online pension plan. Now, these are managed by the likes of BlackRock, State Street Global Advisors, Legal & General or HSBC. Now, they have over 250,000 customers that have already signed up to combine their pensions with PensionBee, combining close to £1 billion into their plans. You can also find out more information about PensionBee at pensionbee.com, and as always with investments, your capital is at risk.
Hello and welcome to episode 259 of the Money to the Masses podcast with your resident expert as always, Damien Fay and me, Andy Leakes. Damien, how you doing?
I'm good. I'm very good. It's good to be back. We've had we've been celebrating our 10th anniversary on and off for over a week now, haven't we? We went out for lunch this week to celebrate. Yeah. If you've been on Instagram, you'd have seen a picture of us.
You did more for me on the Money to the Masses 10th anniversary than I did for my wife on our 10th wedding anniversary. So that was very nice of you.
It's love, Andy. It must be love. No, it's a very, very good week. We've been heads down as usual, doing lots of content. So you'll find if you go to the newsletter this week, because we don't push the newsletter on a Sunday enough. We should do it more. So every Sunday we send out a newsletter to subscribers, which has it basically has a collection of all the key stories around the internet from the national press and from us about the things that are impacting your finances and things that you should be looking at as well. It's not just news, and we get so much good feedback about it, but we just never push it. So if you go to moneytothemasses.com/newsletter, you will find how you can sign up for it. And in there, we also do a full review of the weekend papers on the Sunday morning. Somebody gets up in the morning and does a review, so you don't have to go out and buy them. So the money sections and the property sections.
So by the time that hits your email at 10 o'clock on a Sunday morning, you have got all the best stories from all the money sections and property. And you don't even have to leave your house.
Yeah, and people have been writing to me recently saying how much they like it. It's the one email they don't unsubscribe from. And we do so much stuff, we forget to shout about it. But the reason I mention it is because there is so much of our own content in it this week, because we are pushing out so much stuff on lots of different topics and so many people writing for us, because obviously us writing and freelancers. So make sure you go and check out the newsletter this week. And the other thing, before we move on, a request from me. If you're listening to this podcast and you've been lucky enough to get one of our exclusive Money to the Masses mugs, then please send in your mugshot for our Wall of Fame. If you've not done so, you can send them to Lauren at moneytothemasses.com, or you can send them to me, Damien, at moneytothemasses.com, and that's Damien with an E. I should always stress that because people still spell my name incorrectly wherever I go. We laugh about it during the week. The FT even spelt my name incorrectly when they put me in there initially, but luckily they kindly changed it. But let's get more people on the Wall of Fame. There's plenty of people on there, but I want to get everybody who has a mug on there. That would be fantastic. So please do that, and do leave us a review. We'll ask for a review on iTunes at the beginning of the podcast, but there we go.
Yeah, it really is great for inspiration. We've got a wall that we look at every day that's got quotes, and it's like a decal that we look at, but that mug Wall of Fame gives us, we're looking at it right now, aren't we, Damien? There must be about 30 people on there. You could be one. We want to get it up to at least 50. We want to cover the whole wall if we can.
That's the aim.
Right. What have we got coming up on this week's pod?
So the investment piece I'm going to do this week is centered around currencies. So it's a topic we don't talk about often, but it's one that is relevant to people. I love something that is a shortcut. So when you get up in the morning, or I do, not everybody does this, but when I get up, one of the things I do is look at my investment app. So the stocks app you get on your iPhone or whatever phone that you have, there'll be another equivalent app. And I have key ones on there, key indices that help me get a quick grasp of what's going on. But this week, I want to just focus on the currency part of that, because I don't talk much about currencies. The next part of the podcast will be on Section 75 of the Consumer Credit Act, but in particular a loophole. And this came to light thanks to one of our Facebook followers who wrote into us and asked us a question about an issue they had where Thomas Cook had gone bust, as we all know, and they had made a claim through their credit card and under this particular part of the Consumer Credit Act, and it's been refused. And they asked us if it was valid, and we looked into it, and surprisingly it was. And I think it's not well known, so make sure you listen to that because I'm going to explain how that could impact everybody. And last but no means least, parking tickets and appealing parking tickets. And the reason this has made it onto the podcast is because Money to the Mess has got a parking ticket this week. I will explain more later, but it is particularly relevant for us this week.
Good. It's great to see that 2 of our 3 pieces this week are inspired either by listeners or something that's happened to us in the office. So that's brilliant stuff. What are we going to start? We're going to start with a meaty currency piece?
Yeah, the meaty currency piece. Now, in prepping this part of the podcast, I went back and listened to podcast 189 of our podcast. So the Money to the Masses podcast 189, called Currency Market Warning Signs. And that was actually published on the 21st of August 2018. So that's a good 18 months ago. And we always like to make our podcasts evergreen. And it's really good when you go back and listen to them to hear how evergreen they are. And at that point, if you listen to that podcast, I talked a lot about certain key currencies out there that were showing flashing warning signals that the market could be about to turn over, roll over and fall. And it was, you need to go back and listen to that particular podcast because I don't want to dwell on it. But actually now, with the benefit of hindsight, August 2018 was just 2 months. Well, it wasn't. It's probably about 6 weeks before the stock market collapsed in October 2018. So I'd never really picked that back up on that, but we don't tend to go back to our podcasts and see if things we talked about proved true or not. But this was an example where we started to say our currency markets flashing warning signals, talked about it, compared it to the February of 2018, and actually now going back, it looks like it was a pretty valid warning. So what I want to do this time though, after you've listened to that one, you'll find that useful. It's evergreen. It talks about warning signs. But there are probably 3 key themes that are going on at the moment in the world of investing, and that's the China-US trade war is one of the key themes. It's taken a slight back seat because of the phase 1 trade deal that's happened, and people are feeling a bit more optimistic about that. But the other theme that kind of has swamped that is the coronavirus and the potential to dampen global economic growth. And the third theme is really Brexit for us UK investors. And when I look at currency markets, I use 3 of them to give me a good steer of where we are in the grand scheme of things with each of those different topics, because there's so many headlines that are being printed around Brexit, around the trade war, around the coronavirus, about the outlook for the global economy. You don't know which way to look. And so I find to cut through the noise, it's quite useful to have these 3 currency exchange rates just to give you a bit of a dipstick as where we are. So I'm going to start off with probably the simplest one, which is the pound to the US dollar exchange rate. So if you get your stock app and you type in GBP USD, so it's the Great British Pound US dollar, you will get the exchange rate that pops up. And that is a good benchmark for where we are on Brexit. Now, of course, there's lots of different factors that start to influence exchange rates. It's not just one thing. So there's lots of moving parts. But the Brexit saga has had a huge impact on the exchange rate. If you go back to 2016 and just a bit before, we were up around $1.45, I think it was, for the dollar versus the pound. But of course, after Brexit, that then started to plummet at our lows, where hard Brexit seemed to be, or a no-deal Brexit seemed to be well and truly on the cards. We actually crept down to $1.20, so we had a huge fall in the value of the pound. Now, of course, that ends up having an impact on the FTSE 100. Tends to be when the pound falls in value against the US dollar, it pushes the FTSE 100 upwards because of those overseas revenues. Therefore, when they're converted back into English pounds from dollars, then they tend to it actually increases the value of them in pound terms. So it pushes up share prices. So there's a relationship there. But it also boosts the value of your overseas holdings. So let's say you have a US equity fund that's not hedged. then if the pound keeps falling, then the value of that holding will go up, irrespective of what's going on with ignoring the equity markets, just the value because of the exchange rate. But what it's good for is it's so difficult to try and work out what's going on in Brexit, whether we're actually moving in a positive direction or a negative direction. I look at that exchange rate. So at the moment, we were flirting with $1.30, and that's a key level. There's a lot of support around that level. When we go below it, it becomes resistance. So if we're above that, that's a much more positive, bullish sign for the pound. If we're below it, it's obviously a bit more negative, a bit more bearish. We've dropped down to below $1.29. There's again support on the way down.
Who sets that rate, by the way? Because obviously that's a key level that you talk about in your midweek markets, and I think, well, why is it a key level? Who's saying that's a key level and why? That's a silly question.
No, it's not. I mean, the exchange rate itself is not set by any person. There are some currencies, which we'll mention a bit later, where they may be pegged, so it might be manipulated more by the central bank. But this is down to supply and demand of people wanting particular currencies. But with technical analysis, there are levels at which algorithms will start to buy in. If you imagine certain patterns, I try to use an analogy. If you were to watch a football match and you see the momentum of the game starting to swing, you start to see a team pushing into the other half, you might start to therefore bet, I think Spurs are going to go on and win this match. Or if you've been watching the game the other night where we were just sitting back in our own half, you could tell that this is going to probably only end up one way and we're going to end up almost getting knocked out of Europe. It's the same with like technical analysis. When you start to see certain patterns, movements in prices, then it becomes a key level. So when you start to have a particular, what happened in the pound dollar recently, they have these patterns, they give them names like a flag, and it will be because of what it looks like, and it can give you an indication to where the future path goes. It's uncanny, some of these. It's not prescriptive. It's again using another comparison. It's like weather maps, where you see our weather tends to come from across the Atlantic and certain wind patterns, and you can start to see that if certain things happen, then inevitably it might rain. And like you get the old wives' tales about things like red sky at night and all these sort of things. So it's just, if patterns of price tend to happen, it starts to trigger emotions within certain market participants, buyers, sellers, that they start to act. And so that's why you get these key levels. And $1.30 is one that's probably is held as a key level for most people. So when we go below that, it tends to be slightly negative.
And does that change over time? So in 10 years' time, $1.30, that might not be a...
Yeah, it does. It depends where you've been before. So it can change over time. And so we might get up to, once we break above a certain level, that level becomes a resistance line. Right. And then to break through that starts to become more difficult. So in equity markets, you'll look at, perhaps there'll be old ones, and it's a fascinating subject because it gets down to mathematics. It's things like Fibonacci numbers and all this kind of stuff. It matters where you've been and where you are, and you get these lines of resistance and they're always changing. So it's a good question, but at this point in time, $1.30 is a key level. So if you want to know where we're going to Brexit, if you look from day to day, you start to see that going up. We're starting to move upwards. Then it's probably because things are positive in the Brexit world. It isn't just Brexit. It can be because the Bank of England may be doing something to interest rates, but it's a good Brexit indicator. Now, the US-China trade war, the exchange rate that between that and the Chinese yuan, so USD CNY is the code you want to start to type into your stock app. It will give you that exchange rate. Now, if you look at that rate, it's slightly different to the dollar pound because it is pegged by the People's Bank of China. So that means that they do have an influence into where that is. It's not just free floating. Now, one of the key levels is the 7 level. So at the moment, it's around about 7 yuan for the US dollar. And because there is an element of it's been accused of manipulating their currency exchange rate, if they weaken it, then that's obviously good for exports. And when I say they, I'm talking about China. So if the People's Bank of China weaken their currency, do you remember Donald Trump has often been cited and calling them currency manipulators in this trade war? So when the trade war was getting a bit tetchy and we were getting to levels where they were being accused of not cooperating or tensions rose, that exchange rate started to creep up. So you started to get more of the Chinese currency for the US dollar. So you keep an eye on that. And because it's pegged, you can see these moves. If you go back to August, for example, when tensions were at their highest, that was the first time the yuan had broken above 7 to the dollar for quite some time, and that was where they were accused of being currency manipulators. Then, when trade tensions improved and dissipated, then the Chinese currency strengthened against the dollar. And to show you this, if you look at the strength of the Chinese currency versus the dollar since the start of the year, it's only fallen 2%, which might sound like a sizable number in some ways, but it's not compared to other emerging market currencies, given what's going on with the coronavirus. So I'll come on to that in a second with the coronavirus. But that's because obviously the People's Bank of China have influence over that exchange rate. So I look at that exchange rate just to see, well, if the markets are going all over the place, what is it down to? Is it down to the trade war tensions? And that might give you a sign. And also, when it's getting towards that 7 level, that Donald Trump is going to start getting tetchy again. It might start getting him sort of at least firing some tweets off that could start to rock the boat. So again, I like to watch that one. It's quite an interesting one to have on your app. The third one I want to mention is the Australian dollar versus the US dollar. So AUD USD, if you put that into your app. And this one's become more important as time's gone on because of the coronavirus. Now, the Aussie dollar is a good proxy for global economic growth, but in particular growth in China, because Australia has a very exports a lot of commodities, particularly to China. They influence the currency, and obviously China imports a lot of commodities because of its economy and trying to keep that going, and the things that it makes from using those commodities, and obviously just to use the consumptions for energy, etc. So when the Australian dollar falls, it can be seen as a sign that there is a dip in maybe demand from China, and given that China now is such a significant part of the global economy, then that obviously has a knock-on impact to the global economy. And if you look at the Australian dollar versus the US dollar, that's fallen more than 6% since the coronavirus outbreak. So that's a really big move, and that is an indicator that there's still concerns, and that currency is still falling at this point in time. So if you look at those three, you took them in the round, then the pound has strengthened since we had since a period of last year where we were still lower than where we are now. We were down to about sort of in the early 120s. It's improved, got above 130. That was because Brexit, the outlook for Brexit improved, and we didn't look like we were going to have a no-deal or hard Brexit. That started to pull back a bit, so we can see where we are on the Brexit landscape. It's not disastrous. We're still in the negotiation phase. It could go either way. With the US-China trade war, the currency is starting to weaken. The Chinese currency is weakening against the US dollar. Nothing crazy, but we're getting at a key level again. Will Trump start to turn the screws again? Part of this is down to the coronavirus, but part of it is obviously down to the fact that China will need to reduce its currency to try and boost its economy as a result of the coronavirus. But will that upset Trump? But the main one at the moment is, if you look at that Australian dollar versus US dollar, it's falling, and all the time it keeps falling, that is a sign that perhaps all's not well in the Chinese economy. So there are three of them I like to keep an eye on, just as what's going on with these macro themes. When the markets move violently one day, you could have a look at any one of these things and go, I don't think it's going to be Brexit. I don't think it's a trade war. Perhaps it's to do with the coronavirus, or it's something else. It just gives you an idea of where to look. So imagine your house, when your smoke alarm goes off, you start to think, it doesn't mean there's a fire, but it might mean you know which room to go and look into. The other one I'll mention, the final one that I do look at, is the US dollar versus the Japanese yen, so USD JPY. And that's a good measure of risk, really, because the yen tends to strengthen when the world starts to become a little bit spooked, because it's one of those haven currencies. At the moment, it isn't behaving like it has historically.
What's the reason for that? Just a strong economy?
Why it's not behaving?
Why is it a haven?
It just traditionally has been. So people go and buy it because of like you say, a strong economy. The dollar is often similarly had the same impact, but particularly the Japanese yen, I think people like it because if you go back, the Japanese economy, like you say, was very strong. We've only been in this doldrums we've been in it now for the last 20, 30 years, but previously traders would buy the yen. Another one is the Swiss franc, so they just get a haven status and people buy them because of the security of those economies or central banks, etc. So with the Japanese yen, it hasn't been quite the haven of recent years, because again, there's worries about the impact of the coronavirus on that particular economy, and there's been some slightly negative numbers coming out of Japan in terms of potential future economic growth, and so that made people be a little bit less likely to buy it, go to it as a haven. But generally speaking, if you see the yen weakening against the dollar, it can be a sign that people are starting to take risk off the table. But then you'll probably see that in other assets. You'll see equities fall and you'll see bonds rally. So it's one I just look at from time to time, mainly though because I also know that if you have the yen weaken against the dollar, it tends to be quite good for Japanese equity anyway. So if it's the other way around, the yen weakens against the dollar, it tends to mean that your Japanese holdings might start to get a boost because of the way it's an export focused economy as well. So those are the three main ones, with a fourth, but yeah, they're just good indicators. You wake up in the morning, you want to look. You don't necessarily trade in currencies. I don't. They're very volatile, but they're quite good for just telling you perhaps what's going on in the macro themes.
Yeah, so what you will do in the morning, you'll have a quick look, and maybe if something's spiked or something's happened, you'll go, well, what's going on there? And you'll just have a little look under the hood and see what's happening.
Yeah, then you go and look at the news headlines, and you'll probably guess. You'll sit there and go, well, what's happened? If something happened in Brexit, if the pound was to suddenly crash through the floor one day, like maybe fall 2%, I'd be sitting there thinking, what's Boris said?
Yeah.
Or equally, if the Chinese currency has suddenly weakened overnight, I'd be like, what news has just come out about their economy or about the trade war? Or again, if it's the other way around, the Australian dollar completely crashed, I'd be sitting there thinking, has there been loads of new coronavirus cases, or has there been some news about the global economy and future economic growth? And it gives you something to look at, and therefore you go from those and you sit there and think, you take it around, what impact will those themes therefore have on other assets? It's just the big jigsaw pieces you try to pull together to build a puzzle and try and understand all this stuff.
Good stuff. Learned a lot there. So we're going to look at credit cards next, and a reminder on the section 75. And this came from someone who's on our Facebook group who had a question. Something had happened to them. We looked into it, and we were astounded by the results and thought we'd share it.
Yeah, that's it in a nutshell. There are so many nuances to every rule that goes out there. Well, whatever it is in money, whether it's investing, credit cards, and sometimes you don't work out or know these nuances until it comes to light through cases. And sometimes, as we'll talk about now, the rules aren't very clear on certain things and what is covered and what isn't, and it only comes to light when somebody tries to make a claim and then they fall foul and it ends up going to the ombudsman. Now in this case, we had a listener write in and say that they had tried to make a claim on their credit card under Section 75 of the Consumer Credit Act for when Thomas Cook went bust, and about the flights that they'd booked. And to give people a quick reminder before we go on what this act is, it's a part of the Consumer Credit Act that means that if you pay for something costing between £100 and £30,000 on credit, then the provider is equally liable for something if it goes wrong. So that means if it doesn't turn up, say, or if it's faulty, then you have a contract with the person who provided credit that you can therefore make a claim against them. So it's a very good way of getting protection if you're going to buy something, like you say, flights, maybe a holiday, that you get additional protection if you buy on credit card. And
key thing is, you don't have to put the whole amount on the credit card. So long as you put a proportion of it, then you're covered.
Yeah, and the rule is that you have the cost has to be over £100, so it can't be 100, it has to be over 100. But the amount you pay on your credit card can be as little as £1. It doesn't matter. It doesn't have to be the full amount that you potentially could claim or the full amount of the product. You could, for example, go and buy a car for 10 grand and put down a £50 deposit using your credit card, but you are therefore covered for the full amount of the car. And it's about the cost of the single item, they call it. It's not the fees, charges and delivery stuff. It's the cash value of the item that you're purchasing. Now, the other thing I just want to mention before we go on is that there are these loopholes, that third-party loopholes that have been uncovered, where if you pay through PayPal, WorldPay, Stripe, those sorts of services, it can break the link between the credit card company and the item that you're purchasing. And that means that sometimes they can wiggle out of actually covering you and having to pay you for or reject your claim under the Consumer
It's a
Credit
good
Act.
point. And actually, but on that as well, PayPal themselves or the payment service who's like the linchpin in that sometimes have their own rules which may cover you. But obviously you're digging into sort of the terms and conditions there.
Yeah, so if all these things, even if you think you're not covered or they're rejected, it's always worth to continue complaining and go to the Ombudsman, because as we'll come on to, it seems to almost be that you have to go to the Ombudsman sometimes on particular cases because the rules aren't particularly clear. One thing, it doesn't matter if you cancel a card. So if you had to pay on a credit card and you no longer have that card and wanted to make a claim, you can still theoretically make a claim. And also, if you buy something abroad, that is also covered, which is a wonderful level of protection. So we are fortunate in the UK that we do have this particular protection under the Consumer Credit Act. But as this person who wrote in, they had paid for a friend's flight or friend's holiday under the, I think it was a flight they'd paid for Thomas Cook, that obviously Thomas Cook went bust. And so they weren't travelling themselves. And what they did was therefore make a claim, as quite rightly they would think they would be able to, under the Section 75 of the Consumer Credit Act to have that money reimbursed. And they showed us the emails that they got back, and ultimately it was rejected. The claim was rejected by their credit card provider. And the reason was because the flight was not in the cardholder's name. Now, the person who paid for the flight obviously went back and said, well, of course it isn't, I wasn't going. The flight has to be in the name of the person who's travelling, it has to match their passport, etc. And the credit card provider came back and said, yeah, that is the problem. It wasn't you travelling, it wasn't in your name, therefore it is rejected. So they asked us to look into it, and unfortunately, the credit card provider is right. The rules are always a bit grey, and the problem is it is very grey, a lot of this stuff. But if you book a holiday in somebody else's name and you're not going, then there's a very good chance that you won't get the full protection if they go bust. So there's a lot of conflicting information out there. So let's take, for example, you go on holiday and you book it for a group of people and they give you the cash and you pay for it on your credit card. Now, if the company went bust who you were going to be travelling with, then generally, yes, you will get protection. Maybe your family will get protection, so your partner and your children will be protected under Section 75 of the Consumer Credit Act, but it's not certain that anybody else who was travelling as well will be. Now, trading standards seem to think that you would be, but the Financial Ombudsman says, well, it's a bit uncertain, it's a grey area, and it probably is only going to be you and your close family who are going. The point is that if you want to be 100% certain that you will be covered, everybody on a group booking will be covered, they should pay for their part of it, their flight, themselves using their own credit card, then they are covered. So what this means is if you buy a flight for somebody, like this person did, and you are not travelling, then it's unlikely to be covered. And this also has implications if you have a second card holder. So lots of people will have a credit card and maybe their partner may have a second card on the same account. Now, if they buy goods and services, they will need to show the item or the service is for the primary benefit of the primary account holder in order to be covered. And so that could have issues. If you were to buy a flight, for example, if that person, the second account holder, was to buy a flight and travel, yet if you were the main account holder, you weren't travelling, and something went wrong with that flight or whatever the goods or service that they bought is, then it is unlikely to be covered by the Section 75 of the Consumer Credit Act. So it's a FYI. If it's obviously that second card holder buys a gift, so for the primary account holder, then of course it's obvious that it's for their benefit, so it would be covered. So it's just a big FYI to anybody out there to realise there is this loophole, this grey area that exists. So it means that you may want to have, for example, if you and your partner may want to have your own credit cards if you're going to be buying separate things that you're each not getting benefit from. And a lot of people wouldn't realise it. I didn't realise quite the size of this loophole that credit card providers are keeping open and going through. So it's a sad story ultimately because the person has lost out. And but it's particularly relevant given the likes of Thomas Cook and companies that size going bust. But if you find yourself maybe in this loophole, it's always worth making a claim because, as I said, it's a grey area, and especially with the case of a second card holder, then some providers will pay out and others won't. It seems to be down to the provider, so it's always worth making a claim, and if you're not happy, then complaining to the Ombudsman.
Great stuff. Okay, parking tickets. What have we got? Something happened this week, didn't it?
We overstayed our welcome.
Yeah.
We went for a nice lunch. Tapas lunch. If you look at our Instagram feed, you can see us all quite happy. It was just the moment, probably, that picture was taken. There was a ticket inspector putting a ticket on one of the Money to the Masses cars. So we'd outstayed our welcome at the parking bay.
You make it sound like we've got branded cars in one of the money.
Well, what I didn't want to
hey, that's not a bad idea.
It isn't a bad idea if we could afford it. But I didn't want to say Lauren got a parking ticket, but you forced me down into a corner. Lauren overstayed her welcome in a parking bay. And of course, what happened is, you know, where you go to these restaurants and there's parking out front and 2 hours, the rest, it takes longer, you set the alarm, you're chatting away, and we just lost track of time. And as we went outside, Lauren saw the traffic warden disappearing into the distance with a skip in his stride, and then realised that we had a communal ticket, because obviously it was a Money to the Masses ticket, even though it was Lauren's car, because we'd all travelled in it. But it made us look at the rules surrounding parking tickets. And there was an interesting piece which appeared in Which this week, and it talked about the Ombudsman services. They produced a Parking on Private Land Appeals annual report. Now, this sounds riveting. It sounds like the most exciting report you could ever want to download.
I'll bookmark that one for tonight.
You can download it, and it is in colour. So 40% of parking appeals between October 2018 and September 19 were led to cancelled charges. So 40% is big. It's almost 1 in 2. So the idea is that if you get a ticket, you almost should always appeal it. Now, there have been new rules that have come into effect in January. Now, there is a British Parking Association, BPA, that is out there to protect motorists, apparently, even though it feels like we are not protected in any way from traffic wardens. But there are new rules that have come in this January that are meant to help us even more. So what I want to do is go through 5 steps which came up with, which I thought were pretty good, about how to, what you should do in the event of a parking ticket. Now, the first one, T's and C's. I didn't know this, but apparently you have 5 minutes before you purchase a ticket to consider the T's and C's, the terms and conditions of the car park, in which obviously you're not allowed to get a parking ticket.
That's like a grace period, so I mean that's good to know.
Yeah, so when I don't know if you're like me, I turn up and then almost get into a frenzy. Well, we've got to get a ticket because I don't want to get a ticket before I've only just got here, and then before I've got these visions of these wardens hiding around corners who are going to jump out as soon as I get there. Although, in my defence, when Andy and I first worked together, there were wardens who used to do that. I mean, in those days, you'd go out for lunch and you'd see them appearing around the corners, waiting for the delivery men to turn up. They'd sprint down the road, slap on a ticket, and ruin someone's day. But you have 5 minutes to check T's and C's. But importantly, after the time period runs out for which you've paid, you have a 10-minute grace period. And so if you get a ticket within 10 minutes of your period or expiry time, then you can appeal that and you would almost certainly be successful. So unfortunately, the ticket inspector in our instance gave us a ticket 2 minutes outside of that period. He knew the rules and gave us a ticket. Now, one of the recent rule changes, if you key in your number plate, for example, there's so many car parks now that are slightly more modern to stop you pulling out of the car parking space and saying to the next person coming in, winding down the window, saying, "Here, do you want my parking ticket?" Those days are starting to disappear because they make you put your number plate on the ticket. And there is a rule now that if you have a bit of a fat finger moment, or you just type the wrong thing slightly, so you put a 0 instead of an O or something like that, then you can appeal that. It's meant to allow you, for the fact that as long as you can show that you've paid the correct amount, the ticket is for the time that you were there, but there was a typo, then you can appeal that, and you should get that overturned, and will only have to pay the costs of doing so, sort of the admin costs, which are capped at £20. Obviously, the other thing to look at, if you get a ticket, make sure the signage isn't cryptic in any way, or there are actually signs there where you park, you can see them. I know people who have had parking fines overturned where the parking sign was not in existence where they parked. It may have been somewhere else much further down the road, but it wasn't where they parked and they had it overturned. Gather evidence is the other tip. So if, for example, when you got back to the car or something was, like say, with the signage or all these things, make sure you take photos, etc., or witnesses if you need a witness to say what happened and you've been given a ticket unfairly. The one interesting thing is the discount periods that you get for these tickets. They've always got this thing, haven't they, where they go, if you pay now or pay quickly, it's half price, but if you don't, it's double. apparently during the appeals process, that isn't honoured in any way. Yet that period will still expire. It's not extended. So you will end up, if you lose your appeal, paying twice the amount, which I think slightly unfair. I think that means that it discourages people to appeal, hence probably why they do it. And the other thing to bear in mind, as a rule of thumb, based upon court cases that have happened in the past, if your ticket is over £100 in cost, then that is likely to be classed as unfair, and you should ask for a breakdown of that cost and how they've arrived at it, because there's a good chance that you could challenge the scale of the fine if it's over £100. So there you go. Some quick tips on parking fines. Let's hope we've helped somebody who's going to get caught like we did enjoying themselves.
There were going to be people here screaming out of the podcast going, did you appeal? Did you have any reasons to appeal? We didn't really, did we?
No,
we're outside that 10-minute period.
We were enjoying ourselves too much. I think there is no legislation for you just not rocking up back to your car because you'd had that one last coffee.
We knew the rules. We knew it was fair cop. We missed it by 2 minutes and we had to suck it up. Right, that's it, isn't it? We're done.
We're done this week, Andy.
Okay, so if you want to get in touch with Damien, do so.
Leave a review, please do so, and send in those mug shots. If you, like I say, Lauren@moneytothemasses.com. We love your mug shots. We get lots of. I went to a meeting this week, and it was interesting when I went there. They were asking for a mug, and I said no, because they hadn't done anything mug worthy. So if you think you've done something mug worthy, because they were seeing, they said, you get people wanting the mugs, don't you? They're really popular. And I said, yes, they are popular, and people pose them with their pets and all sorts. So if you've done something mug-worthy, then do let us know, and we will be the judge. We are fairly lenient judges, and then you could too have a mug.
There we go. Damien@moneytothemasses.com if you want to get involved. Don't forget to check out our Facebook community group. That's facebook.com/groups/money to the masses, and you can get involved and ask your questions. And don't forget, we do a lot of stuff on YouTube. Damien's Midweek Markets is always recorded, so you can see him doing it live in the flesh. Go over to YouTube and subscribe to the Money to the Masses channel. And actually, we hit a bit of a landmark this week. We hit the 1,000 subscriber mark, and that's going to fly, isn't it?
Yeah, YouTube is an exciting place to put all this stuff. If you want any visual content we do, it appears on YouTube, so do check that out.
Good stuff. We're done. Until next time.
Until next time.